thank you, first of all, Linda and team, for bringing all of us together here for this Doing Business in Nigeria conference. And thank you, Fola, for, I think, really a great presentation. And I definitely may also steal the Galaxy of Stars term. I really love that. And I think we have one here as well. Yeah, my name is Katharina Link. I'm the CEO of Pulse Africa. Very proud also to be a media partner today with one of our brands, Business Insider Africa. I'm also very excited to moderate this panel on accessing finance for Nigerian businesses. I think a topic that truly is at the heart of growth and opportunity, and obviously only adds to, again, I think some of the focus areas we heard in our keynote just now. Despite challenges like inflation, currency fluctuations, and a complex regulatory environment, we've heard about it just now, and I love that how this set the stage. It's important to mention how Nigerian businesses continue to push boundaries and demonstrate a truly remarkable growth. In fact, in 2024, Nigeria's GDP grew by 3.4%. That's up from 2.8%, signaling strength amidst adversity. Yet one of the biggest obstacles remains access to capital. More than 70% of small and medium-sized businesses in Nigeria struggle to secure the financing they truly need to grow. As entrepreneurs, investors, and business leaders, we often find ourselves questioning the best approach to financing, especially when risk is high and market conditions are volatile. Today, we'll be discussing not just how to secure financing, but also how to build investor confidence, how to structure growth in uncertain times, and the opportunities that exist even in the midst of economic turbulence. And also here, I think we just learned how the mindset plays a huge role in that, and I'm curious to hear. We will hear from our distinguished panelists about the unconventional strategies that have allowed them to succeed, the role of governance in accessing long-term finance, and the policies that could unlock more capital for Nigerian businesses in the near future. As we now embark on this discussion, let us keep in mind that these transformative times, the right financial strategy can be the actual difference if we're surviving or if we're thriving. I'm excited for the insights of our panelists will share today, so let's dive in. And I would like to start with Mrs. Catherine Uju. Good morning. Your company operates in one of the most capital-intensive sectors. How did you first unlock financing as an indigenous operator in an industry dominated by multinationals? What unconventional strategies or partnerships have helped open that door for you?
Good morning, ladies and gentlemen, and our distinguished panelists. If you want to succeed in any business, it doesn't have to be just the one that is dominated by multinationals. You must first of all sit back and reappraise what you want to do. Because every business, you have competitors. And no person will want you to come in and take over their business. If they're there, they want monopoly to an extent. So for me, I worked in oil industry, but it wasn't the upstream. I was the company secretary, legal advisor 1991, company secretary, public and government affairs manager for, legal advisor for Texaco, company secretary, public and government affairs manager for Chevron. And when they merged, to become Chevron, my portfolio for public and government affairs covers West Africa, Nigeria, Cameroon, Togo, Benin, Ivory Coast, and Congo. Okay, while the PLC, company secretary, was Nigeria. So for me to delve into the upstream was a big risk. But in life, if you don't take risk, but calculated risk, then you're not serious. When I got into the upstream, the first thing they told me, she's a lawyer. because I'm a lawyer. I'm not a petroleum engineer. I'm not a geologist or a structural engineer. But today, I'm all of them without certificate. So when I got into that upstream, they told me, what is she doing here? You're a woman. You don't have any business being here. They gave you 2 months to fizzle out. The IOCs, I went to some of them and they said, look, you don't know anything in this area. Okay? But I went back with the determination that I want to do something. First, you have to look at finance. And the banks in Nigeria or anywhere, they don't want to take risk that they cannot justify. So for you to go into businesses, you must have the business model that when anybody looks at it, he'll be convinced. And your documentation, you must have it pure and clear that if the person wants to do a ground check, they'll be able to do it and come up with something. So for me, the IOCs, none of them helped me. But when they saw that we have started making progress, our first drilling first one was a dry hole. Second one, the sidetrack was successful. The IOC, they signed with us from their UK trading group to lift our crude. And they did it for 6 years. But I decided to shut them down because we are losing a lot of money. They will tell you that, oh, you have water in your crude, when I have 0 BS&W. So I shut it down for 8 months. That's another determination. And went and got my export license. Today, we have our largest jetty in Warri. We have the block. I paid off my foreign partner and took it back. So we have it 100%. We have our export terminal. So people come in, we can export their crude for them. And all the challenges that we had from the IOC, I tried to mitigate it and make sure that the Nigerian companies don't face it. So if you are looking at going into business, look at your model and don't look at what this person is doing. The only thing that you can look at them is to find areas where you can, emulate if it's something you want to do. But the first thing is that you must have the vision, and the vision must be clear. So for me, it's a competition now between Brittania-U and the IOCs.
Mm-hmm. Very, very interesting and impressive also. Thank you so much, Ms. Katrin. I would like to move to you, Ni. Good morning. Great to have you. Good to see you. Let's hear from you and from your lens as an investor, right? What are the top qualities you look for in Nigerian businesses before committing any capital, especially during economic uncertainty as we have it at the moment? What instantly signals for you bankable or not yet?
Good morning, everyone. Thank you for having me. Linda, the intro is the best intro to any speaking engagement I've ever... Yeah, I need to wake up with that music every day. It's really inspiring. Accessing capital in Nigeria or in this climate today is extremely difficult. But at the same time, there's capital to be deployed. What people like us, Aruwa, are looking for is clarity of strategy, the energy and the integrity of its people, the identified market, the size of the market, the potential scale of the business. When you have all of those things, then I think it's easy to access the capital. Fola is a good friend, and you can tell why UAC is different under his leadership today. There's a lot of clarity as to what they need to do. So when you're that clear and that focused, you'd always be able to access capital. Of course, it's not easy when you're starting out, but the work is in identifying the opportunity, getting a good team together, and having a very clear strategy.
Fantastic, very clear, and I also think very, very short and crisp. Thank you so much. Fantastic. Let's move to you, Jude. Good morning, and great having you.
Thank you.
From your perspective, right, many Nigerian businesses perceive the exchange as a space reserved for a select few. From your experience, what are the most misunderstood aspects of accessing capital through the Nigerian exchange, and how can more businesses practically begin the journey toward listing or structured financing?
Good morning, everyone. And let me start by thanking the organizers of this event for inviting the exchange to be part of this conversation. Through our lens as an exchange, we are a platform provider for businesses to be able to raise capital. And how that is done is through products that we offer on the exchange. So the exchange is a multi-asset exchange. Our market cap is well over 117 trillion naira across different asset classes. And the providers of the capital are mostly investors. We have international, domestic, retail investors that utilize our platform. And so these investors will buy the products, and that is how the businesses will get access to the capital. That's just a simple way of explaining what to do. In terms of the perception, yes, when you hear names like UAC, they've been around for a while. They're listed on the exchange. You hear Nigerian breweries, Cadbury, multinationals. You tend to begin to believe that those are the only people that can access capital from an exchange. But that's not the reality. We have 322 securities that are listed on our exchange, away from the multinational names that you know. Champion Breweries is listed on our exchange. Cutis PLC. These are indigenous companies that are listed on our exchange. But I think for businesses to be able to access capital from the exchange, there's a level of governance structure that a business must have. What you find is a lot of the SMEs are too informal to be able to access public capital. And that is why we're happy to be here to provide insight as to how they need to organize themselves to be able to access public capital. There's a doyen in the market, stockbrokers, a doyen in the market that once said, coming to access public capital is like a company coming to undress in public. And I don't think it's a very good thing for anyone to want to undress in public, but that's essentially what it is. UAC is listed today and it can access capital because of the heightened level of corporate governance. It's almost like there's nothing to hide. There's a study that was done by McKinsey, and it showed that listed companies are more tax compliant because there's really nowhere to hide. You know, not every business is really open to that idea. You know, so that level of corporate governance is perhaps what drives people away from coming to the exchange. But away from that, the exchange has different boards where companies can also situate themselves. So it's not just our main board, it's not our premium board. We also have a growth board that is really for SMEs to be able to access capital. So for as little as 50 million market cap, the company is ready, you know, to be able to come to the exchange to access capital. And we've been able to help companies to do that. On our growth board, we have over 7 companies that are listed. And these are companies that are really indigenous companies operating in Nigeria. It just means that to access public capital, you have to make sure that the structure of your business, apart from your strategy, aligns with the best international practice. For instance, you must have a well-audited account. You must follow a particular standard. We will recommend international financial reporting standard. Some entrepreneurs don't even think that is important. All they know is that I know my finances, I know my cost, and I know my profit. But that's not how it works. These are some of the little hurdles that they need to put in place to be able to access capital. But just for clarity, The exchange is a viable platform where businesses can raise capital. Last year, we assisted the banks in the course of this recapitalization they are doing to raise over 2 trillion naira. That's a lot of money. Now, away from the banks, companies like Nigerian breweries were able to raise over 540 billion naira from the exchange. You know, in all, last year we facilitated the raise of over 8 trillion naira for businesses across different structures. So it's not just companies. We do have federal government raising money through the exchange, through the issuance of federal government bonds. So we have 158 FGM bonds that are listed on our exchange. And these are how we continue to provide access to companies to be able to raise capital. It's just the level of governance they must have. So the exchange is not for multinationals, neither is it for federal governments alone. It's also for any business that is willing to subject itself to that level of heightened corporate governance, and they will be able to raise capital. And we have the platform and the means to assist these companies. So it's not just the companies on their own. We are actually committed to assisting the companies. And our goal is to make sure that we have an exchange that is really committed to helping businesses raise capital in the domestic market. Don't forget that we also have international investors that invest in our markets. And these investors can only invest in a company that has some level of corporate governance. So if you think about the figure, last year we traded 2.8 trillion naira of secondary market activity, and 15% of that was done by international investors from the UK, from the US, from South Africa, and from Netherlands, who are using our platform to be able to raise capital.
Thank you so much, Jude. And I think some great insights that you're giving us to probably change some of those maybe wrong or not balanced enough perceptions that are there. I like how you gave us some facts also on actually the positive impact of being listed and of how governance actually can drive success and growth. I think there's often a misconception about that as well, that governance is rather slowing one down. Let's move to you, Dr. Inalego. Great having you.
Thank you.
For you. You've led operational and structural transformation at Champion Breweries. How did you prioritize internal resource allocation when external financing options were rather limited? What role did operational efficiency play in your growth story?
Okay, thank you so much for the question. And I would also like to thank the convener for affording us this opportunity to be here. The first thing I would like to say in response to your question is that financial and operational efficiency is not just a cost lever. It's actually our growth capital. That's the perspective that we maintain. And the reason why I'm saying so is because when I look at how our business model runs, because you need to understand how your business runs, and then focus your attention on how to improve the efficiency of the work streams and the activities that will help you maximize profitability. Now, I give you one one example that happened that has led us to where we are in terms of being very operationally efficient, to the extent that we then did not need to even embark on borrowing in order to finance our operation. Our model is based on returnable glass bottle. And if you don't put some efficiency behind recovering these empties from trade, you will limit your capacity to generate stock that leads to sale. And of course, you can't sell what you don't have, and of course, you can't generate revenue from what you don't sell. And and the last part is that if you are not very cost efficient or operationally efficient, then you're also not able to be profitable in spite of revenue generation that you must have, embarked on. So for us, we took very critical decisions around where we want to devote our capital expenditure and our operational expenditure. Doubled it down from activities that will not help us, improve our margins, will not help us in being profitable. And by so doing, we were able to improve, our RPM return rate so significantly. I mean, last year we ended the year at 100% return of our empties. And so that has boosted our capacity, to be able to produce more and to be able to sell more. So operational efficiency is critical if you want your business to succeed and if you want to avoid the need to even borrow. Another point I would like to mention is that understand your business model and make sure you focus your attention on the aspect of that model that works. Our business relies, very strongly on funding from our customers. Our customers in this context is our distributors. If you are in the habit of giving a lot of credit to your customers, you are going to run into trouble eventually. So for us, we run a model where you don't get products delivered to you unless you have funded. And if we have to give credit to you, you must meet certain criteria in terms of eligibility, right? Based on your on how good you have transacted business, and how well you support our business, So, and then we also put a cap on how much credit we also offer, so that our cash flow generation and management becomes really very, adequate. So you have to maintain a very disciplined, approach to working capital and cash flow management, and be very efficient at that, so that you will already even minimize the need to even have to borrow, Maybe I'll talk a little bit about, about how we have also been able to navigate our way into capitalizing, our operations. Finally, I would like to also mention that because of what we have done, right, in being very operationally efficient, if you look at our performance in 2024 compared to 2023, you will see very significant, milestones. In the brewing sector, although we are the smallest in terms of volume, but we are also the most profitable and also the most performing. Our profit after tax last year grew by 120%. Our revenue was up by 65% compared to the previous year. Our earnings per share, grew by 82%. Our shareholder equity, we improved it by about 7.7%. Now, the reason why I am bringing out this key financial metrics in assessing our performance as a business is because these are the indicators that give you a sense of how efficient, the company has managed its operations, both financially and otherwise. Thank you.
Thank you so much. Great insights and impressive performance also from your company there last year. Let's move to our last panelist, completing our own here Galaxy of Stars. Mrs. Adesuwa, thanks for being here. Good morning.
Good morning.
You successfully raised over $10 million in a first fund, something that is rare in Nigeria, and I hate to say, but especially for women. So congratulations on that. Can you share a bit? What were the real barriers behind the scenes, and what should founders understand about what it really takes to raise institutional money in this environment?
Thank you. Good morning, everyone, and thank you for having me, and good morning to my fellow panelists as well. So yes, it was very difficult to to raise our first fund. I always say that it took me 8 years and being a first-time fund manager twice, because I spun out of my previous fund to set up Aruwa in 2019. And that previous fund, we had failed to raise that fund as well. So when I set up Aruwa in 2019, I looked around and I tried to see if there were other women that were owning and running funds on the continent. And from my research, I saw that there was less than 10 funds that were female-owned and female-founded that had successfully raised capital since 2008. So I kind of took a step back and thought, well, institutional investors are not going to fund what they don't believe has a track record and what can work. So you can't be what you can't see, right? So the real onus of Aruwa was we saw a very clear gap in the market for women as fund managers, but we also saw a very clear gap in the market in the fact that less than 2% of capital was funding female entrepreneurs on the continent as well. So it was quite obvious to me that if we are able to change the imbalance of capital allocators, but the number of women that are owning and running their own funds, then there'll be a natural trickle-down effect to funding women as entrepreneurs, but also funding products and services that cater to women, funding supply chains that advance female participation. So that was really the onus of setting up Aruwa, but it took a long time to get to the final close of that fund, and with COVID in between, it was very difficult to raise capital. So what we had to do was just grind and a lot of hustle, a lot of grit. In the middle of COVID, we were able to mobilize local capital from HNIs, family offices, reducing our minimum ticket size. I always joke that before COVID, my minimum ticket size in my fund was $500,000. After COVID, it was $25,000. So you have to be nimble, you have to be adaptable to the environment. But I think what helped us get our first institutional check was we had established a track record. So we were able to mobilize local capital from individuals to build a portfolio. So we had about 5 investments in our portfolio, and then we were able to get the anchor investment of Visa Foundation that invested $4 million into our fund. Then we were able to get MasterCard Foundation. Then we were able to get FSD Africa, that's backed by the British government. So it's, as raising institutional capital as a woman, but also as an entrepreneur, it requires a lot of resilience, it requires adaptability, it requires governance, so making sure that you can provide comfort to institutional investors, that you have strong internal controls within your business, you have a board that you're accountable to, there's transparency, there's communication in bad times, but also in good times. So all of those things add up to make sure that institutional investors are confident that in investing in you and investing in your vision. But after what was a very intense and long journey, very grateful to God that at the end of 2022 we were able to raise an oversubscribed fund, over $20 million. And now we're on our second fund that's about a $50 million fund as well. So it's been a long journey, but I think when you're able to convince institutional investors that you have the right structures in place, you have the right internal controls in place, but also you have a track record as well is very important. They don't want to invest in a blind pool. You need to show them examples. You need to show them entrepreneurs that have decided to partner with you and show them the success stories of the investments that you've backed as well. So it takes a different mix of different things. But institutional investors are sticky, so once you get them, they will back you continuously. So it's hard to get them at the first time, but once you get them, they're very sticky.
Fantastic. Thank you so much. And we're going to come back to some of those points. I think you hinted, on some more, really valuable learnings that you made on this journey. And I think stickiness, yes, but I think you've mentioned something very important, which is, of course, the combination of certain things. Resilience, being adaptive, but the track record that probably led then to even now this fund that you also closed in the second phase. Thank you so much. I'd like to come back to you, Ms. Catherine, and talk a bit about diversification, governance, and also corporate growth. In an environment where perception of risk is very high, how did you, with your company, manage to build investor confidence? Not just in your business model, but in your leadership as a woman, leading an upstream oil company in this country, in Nigeria.
Just like you asked, how did we manage to survive and build the confidence of everyone? Because the confidence is not just from your bankers who are going to fund you or your funding group. One is, just like I said before, you must have a proper business model. Secondly, you as a person, because most people that are going to give you loan are not giving to the company, because the company is a startup. It is your integrity that they will look at. Then secondly, they look at your business model. And then some will ask for references, So for me as a woman, the first thing is I don't play with my integrity. Because even if any bank is giving you money, they will still ask for your personal guarantee. Why would they ask for personal guarantee if you've given them the collaterals that they need? They will still ask for your personal guarantee. The essence is that they want to know your net worth. They want to know if for any reason the business goes by, they can go into whatever thing that you have and take that. So if you are going into business, those things must be paramount. And for me, as a woman, ours is even worse because the men, they trust themselves more than they trust the women. Just like they said, we are supposed to be in the kitchen. So coming into the business world, you're not supposed to be there. So for you to be able to succeed, you must be very committed, you must be firm, and you must have a team, because there's no way you can make any mark just being yourself. You must have a team, and you must be able to interact with the team and then have other advisors. You can't go to the exchange without the exchange asking you chains of questions. Why are they asking you questions? They want to take a risk. They want you to come into their system, and they want anyone that is coming in not to mess up with their reputations that they've built over time. The same thing with the bank. The same thing with any person who you're going to be your business partner. So for me as a woman, I had to do much more. I don't sleep, but I enjoy it because I get to the office before everybody, and I leave the office about 10 o'clock, and I start working with the people in the US or any other country. For you to be, because you are the vision carrier. You don't, even if somebody is a PhD holder, 4 PhDs, he didn't start the business for you. So being a vision carrier, you must be very committed to lead that vision. Other people that you're getting, your staff, will key into that vision. So for me as a woman, I knew what I wanted. And today we have about 7 companies that is under my control. And it's not something that you can just wake up and start. For every obstacle that we encounter, for me, is a business opportunity. When we are drilling our first well, the drilling company said that they had to take out the vessel out to do the TWP. We lost $6.8 million in time because the rig will be counting. They won't wait for you. They won't cancel. So when I asked them, I said, how much is a vessel? And they told me, I bought the vessel at that time, $3 million. Today, we have about 5 vessels. So we have the trading arm, the vessel, the shipping arm. Then we have the product trading arm, importation. I was importing for multinationals. Okay? And then you have the terminal. The terminal will have the largest gross tonnage vessel flying Nigerian flag today. It is you being, committed and ready to take risk. If you're not ready to take risk, don't bother, because it's a risk, but calculated risk. And then if you're a woman, don't look at it. Nobody will look at you because you're very pretty, because you wear good suits. It's for you to deliver. If I give you $10 million with a loan that you're going to pay me $15 million, even if you be the best princess in the world, you must pay the money. So you being a woman has nothing to do with anything. It even makes you to be more resilient in your commitment to do your work.
Thank you so much. Very, very impressive. And I think looking at your career and your impact so far, I think you speaking about the importance also of integrity from the very top is very, very insightful, but also, again, very impressive. And also that you mentioned, I think there are no shortcuts, right? So the hard work that you're putting in every day then makes your risk a calculated risk because you know what you're putting in. Very impressive. Thank you so much. Ni, let's talk about a bit more of your, thank you so much, insights on that diversification, governance, and also growth. You have a perspective that is not only from Lagos, but you've worked in London as well. So how would you compare the approach to financing deals in Nigeria versus markets, versus more mature markets especially? What should Nigerian entrepreneurs unlearn or also learn when seeking capital locally?
It's a very different market, so there's not a lot of basis for comparison. When I was working in the bank in London, Royal Bank of Scotland, we were dealing with large corporates and large firms. And it's very straightforward to raise money on that level. But when I started, for example, co-founded VFD, there was no private capital market that was sophisticated in this environment. Today, there's been a lot of growth and a lot of movement and advancement in being able to raise money from venture capitalists, family offices, and just HNIs who are willing to support entrepreneurial drives. When we started VFD about 16 years ago, we could only raise about $100,000, literally. There's no capital. But Lagos has come a long way. Nigeria has come a very, very long way. There's plenty of capital now available. There's diversity in the range of capital that's available. There's early stage investors, there's angel investors. There are mid-tier private equity firms providing growth capital who will also support your strategic plans and objectives. And at the very top, there are a few large PE firms doing big buyouts as well. So it's being an evolution, but a very positive evolution. 16 years since we started, I think that we are pretty surprised at how much the capital formation has happened in Lagos. In terms of diversity, did you say? Mm-hmm. Yeah, our portfolio is quite diversified. We started out being a financial services holding company, so we started out with a digital bank, asset management, and those kind of businesses. But today, we're in hospitality, real estate. Hopefully, we'll join the manufacturing gang soon. Yeah, it's been quite a run, and the market has developed quite a bit. So any entrepreneur who's seeking money today is definitely better positioned than 10, 15 years ago when the capital market started forming.
Fantastic. And we hear a clear, positive, and opportunity-focused mindset. And I think that's probably also what you're giving to entrepreneurs and business leaders that are in the space and seek for capital.
Absolutely.
Thank you so much. Jude, from where you sit, do you find that the bigger issue for Nigerian businesses is access to capital or the readiness to engage capital markets? What are the most common gaps that prevent businesses from successfully listing or raising funds on the Nigerian exchange?
Just to piggyback on what Nii said, I mean, businesses are able to raise capital now, a lot more capital than before. So the issue is not really so much about inavailability of capital or platform to raise capital. I think it's really more around understanding the various ways of raising capital. For instance, the NGX is a multi-asset exchange, so we're not just an equities house, right? So we have platform that allows corporates to raise capital away from a traditional sale of shares. Even the federal government has leveraged that, utilizing non-interest finance to raise capital. And they've raised over ₦1 trillion just utilizing Sukuk, which they have used to refurbish the roads, and we can see the impact of that on the larger economy. And so for a lot of the corporates, it's really more how they understand the markets and how they can navigate that terrain, which is why we're here, to just provide more insight and more education, right? Sustainable finance is also another means of capital raise. So when a company is thinking about raising money, it shouldn't just be thinking about, oh, I have to sell my shares. So you have to utilize other methods or asset classes to raise capital. Green bonds is fast catching on, and we have seen corporates utilizing that to be able to raise capital. At the NGX, what we try to do is to create the market and at the same time form the partnerships that will open up this market so that corporates can raise the sort of capital they are looking to raise utilizing any of the asset classes that we provide. For instance, we have partnership with Luxembourg Stock Exchange, which is the largest sustainability exchange in the world, and that allows investors to be able to assess your capital raise activities. And Access Bank have capitalized on that. They are listed on an exchange. They're also listed in Luxembourg. And the federal government is looking to raise more capital utilizing the green sustainable part to be able to do that. So I think, in summary, what corporates should really focus on is finding a good financial advisor, right, to look at their funding needs, better understand the business model, and they will be able to provide the best-in-class advice in terms of how they can raise capital. But from an exchange perspective, we're quite open. We work a lot on partnerships. We have MOU with London Stock Exchange, which allows companies to also raise capital beyond Nigeria. For instance, you have Seplat, you have Airtel. They are listed on the London Stock Exchange, and they are also listed on our exchange. And we're able to do that because of the partnerships that we have. So we'll continue to form these partnerships. We have partnership with Johannesburg Stock Exchange. So you find Owando raising capital here and also able to raise capital from South Africa. And those are the ways I think corporates have to start thinking around raising capital, utilizing asset classes, utilizing other markets away from the traditional market. Today we're talking about ASEA, which is African Securities Exchanges Association. It's a much bigger exchange platform when you think about Nigeria. Nigeria has, 322 listed companies, but that platform has over 2,000 companies and has a market cap of over $5 trillion. So it's an open market, and I think corporates should be mindful that there's a large pool of capital available. With the right advice from your financial advisor, you should be able to access all the capital that you require to scale and grow your business.
Thank you so much.
Thank you.
Thank you. And we're going to hear a bit more about that. That's, I think, also a key point that you're making. So I think we're good in time so far, but I'm just encouraging our panelists to stay like that. So we're moving to you, Dr. Nnelegbu. We'd like to hear from you. In an inflationary economy, and we've heard the numbers, and of course for you actually in the FMCG business, that plays a huge role, of course. So you often face the dilemma of cutting costs versus innovating. We heard about operational profitability as well and efficiency. How have you financed innovation? Because we heard that innovation is a lot about risk and is often also a lot about failure. And we always love to talk about innovation also as a growth driver. But how have you financed innovation, new product lines, equipment, processes, without compromising that profitability?
Okay, thank you for the question. Let me just start by saying that profitability must, as a necessity, fund innovation, right? But at the same time, innovation must also protect and grow profitability. We had a situation, my company has been in existence for 50 years, and for a good number of that period, we only had 2 brands and 2 SKUs, stock-keeping units. And it became very necessary for us to innovate because of the consumer research data supported that we needed to bring in more products, expand our portfolio so that we can serve our consumers better. However, it is against a backdrop of limited, access to funding. So how then do you manage this? And so in our case, what we did was to free up resources internally. I remember in the year that we brought this innovation into fruition, that was in 2023, July 24 to be precise. That particular year, we saved over $500 million just by being efficient, in our processes. Our company is really focused on continuous process improvement and lean very heavily on the use of total productive management strategies to eliminate waste and to cut costs. And we do so very intentionally. And as a result of that, we're able to generate cash. But beyond that also, we also looked at our procurement, okay? We rely heavily on cereals like sorghum. And so if you are able to, for example, get your pricing right from your sorghum suppliers, and you are able to negotiate or even renegotiate better terms, in terms of how much you are buying per kilogram, it can have a very significant effect in freeing up cash that you can use in important activities like innovation. I remember in 2024, the price of sorghum was 200 and in February 2024, the price of sorghum was 282 naira per kg. And the moment we saw that as an opportunity, we had to hedge, our procurement of sorghum for the rest of the year at that price, not waiting, not buying in bits, and then fall the risk of buying sorghum at a higher price, later down the year. And so that freed up a whole lot of resources that enabled us, to be able to devote, resources to, for innovation. And I remember in 2023, that was the particular year when we brought those innovations to bear. We saved over 340 million naira pricing. I mean, price advantage that we got from our negotiation on sorghum procurement alone. So it's really very important that you look internally, at your processes to see where you can save cash. Don't put your spend, in areas where you're not going to get value, for it. So that's what I would say was our strategy in financing our innovation.
Fantastic. Thank you so much. And I think we heard from you as well the importance of relationships and partnerships. We heard that from Mr. Jude as well when it comes to also having maybe the right financial advisor, but also in your case, having the right relationships and partnership with a positive impact on, for example, negotiating key prices and procurement. Now, let's move to you again. I think we heard from you a bit about how the journey was to secure actually the institutional funding and how you raised a first and now a second fund. You invest in healthcare, but also agri-processing and also financial inclusion. Given the current macroeconomic climate, what signals do you look for in founders or businesses that give you confidence they can not only survive, but actually scale?
Thank you. Yeah, that's a great question. So I think in this environment that's very volatile, there's a lot of macroeconomic uncertainty. There's been some currency instability as well. We're looking for companies and we're also looking for founders that have a history of, I would just say, unrelenting doggedness. A lot of our diligence now isn't really focused on the analysis in the data rooms. It's really about founder behavior, founder character. How have they, because we're not investing in startups, right? We're investing in businesses that have a proven business model. They're already generating a minimum amount of revenue. So we want to see a track record of how they've been able to build their business in this environment. How have they been able to maneuver pricing? How have they been able to diversify their revenue streams? How have they been able to think about expanding outside of Nigeria? So we want founders that are adaptable. We want founders that are humble in decision making. We want founders that have really thought about a diversified product mix, have thought about diversified currency baskets. So a lot of our emphasis now is we want businesses that have kind of built moats and have a more diversified business model. So we are not only investing in tech-first businesses, we invest in manufacturers, we invest in real economy businesses. So we really want to find businesses that can be export-oriented, and that can have a really diversified revenue base. Our first investment from Fund 2 is actually a local manufacturer of safety boots for the oil and gas industry. And now we're seeing a lot of interest outside of Nigeria as well. So we want those type of businesses that have, outward-looking, export-oriented business models, are solving an essential, providing and manufacturing an essential good or service, and are also benefiting in some way from import substitution as well. So those are some of the things that we're looking for in businesses. And then in founders, we want founders that have just shown a history of resilience in their business model, but are also very humble in how they think about diversifying their business. They're accountable, they welcome governance, they welcome internal controls. These are some of the things that we look for at Aruwa.
Fantastic. And I'd have a follow-up question, but we're coming back to you for the closing remark. But I know that you're doing all of that. So looking at what is an investable business, what is a scalable business, the resilience, the humbleness, all of that. Revenue diversification, currency diversification, but you also have a very strong focus on women. So I hope that you would talk about that in your closing remarks a bit, but thank you so much. Fantastic. We're coming to the final round of questions. So let's start with you again, Mrs. Katrin. Looking back at the toughest financial storm that Brittania-U has weathered in your career. What single decision could you think of that made the biggest difference in keeping the business afloat or accelerating the recovery that you went through? And what can today's entrepreneurs, you believe, learn from that moment that you steered the company through?
The first financial storm that we faced was me starting the business. I started Brittania-U with 1.5 million naira, not dollar. But I went to the bank and took $23 million. And being a new person in the upstream, we went to drill our first well. It was a dry hole. And the $23 million, gone. And I remembered what my husband told me when I started the business. He saw that I used the house that we were living in then, our house in Dolphin Estate, as collateral. So he woke up and said, look, darling, I noticed that you use this house as collateral. I said, yes. He said, what if this business you're going to doesn't work? I said, then we'll be homeless. So by the time I went to do the drilling, the $23 million all went because the team that we got, they said it was a dry hole. They didn't find anything. I now had to go back to the bank and took another 11.4 million. It was Union Bank, actually. But within that time, that was the most difficult period for me. Because now you are living with your husband who figured that you couldn't succeed. If you make a mistake, you will be homeless. And then you made the mistake because you've lost $23 million. I had to quickly go back to the bank. And the bank gave me, that's what I talk about, the confidence. And we went back. But the only thing that I did at that time was that I didn't look at anybody. And that is what built me to who I am. I now had to take over, not being a petroleum engineer or a geologist. I had to start looking at people who have the greatest competence in those areas. And they now came in, and told us what needed. But before that, whatever you're doing, if you're a Muslim or you're a Christian, always remember that there's God. You present everything you want to do. He speaks to us, but we don't. Most times we trust man. Man will disappoint, but God will never. So I saw the well. I'd never been offshore. And I told my MD then, he too is a pastor. I said, I saw that we went on the opposite direction. He said, Madam, this is not spiritual, this is technical. And that gingered me to now want to know what really happened. I got a team. The team, they told me that you're going to pay them $150,000 to do the well design analysis of what went wrong. They do prognosis. So when they finished that, they found out that we went on the opposite direction, which was what I saw too. And they went back 5 days, they struck oil. And that was what kept Brittania-U that you're seeing today. If I had, because everybody was calling me top, industry people, they said, look, you don't know this terrain, exit. Some, even our partner, wanted to buy us out. But I told them, I said no. So withering that storm was one of the major things that happened that strengthened me and toughened me to who I am today. We've had 3 major storms. The one that happened at Marina, you remember 2011 when we brought out our FPSO and there was an explosion. They were doing repairs. Carelessness of some expatriates. They had a blowout from the acetylene gas cylinder. And people, even the President Jonathan, sent the SS people to check that there was a bomb blast. It wasn't a bomb blast, it was at a UBA section at Marina. we had to, the banks, nobody wanted to give us money, because when you have major situation that requires you asking for more money, no bank or any funding group will want to put their money, because the one they have, the chances they might not even get it. So why should I give you more money? So I had to go and meet my friends who have trust. That's why I said build trust first. They gave me funds, borrowed me money at interest that are high, but 11 months we finished and we went back on production.
Thank you.
Then the last one that happened now was you know that Brittania-U had a fire incident at our location, that our FPSOs got burnt and sank. That was July. But today we have the production facility that is almost 3 times what got burnt. So in terms of, and the banks and the insurance hasn't given us money, but the bank gave us money. Over time, if you take money from the bank, make sure you meet your terms and conditions. If you are not able to meet it, be open to them and tell them the truth. Most people have issue of accessing funding because they lie. They don't give the true position of what is happening in their businesses. So thank you.
Thank you, Ma. Please, a round of applause for that. Yes, thank you.
Thank you so much, Ms. Catherine. I think that's absolutely impressive. Also, the clarity that you had and determination, looking at the risk that you took, right? Fantastic. Ni, for you, for your last submission and some more, I think, wisdom, can you share what's one critical policy or structural change you believe could unlock a floodgate of private capital for Nigerian businesses? We've heard from you that you see already a lot more capital available, but what could that policy or structural change be? We have an audience that maybe is very receptive for that. And what practical steps should business owners take now to be ready when and if that change happens?
That change being like a government policy, or? It
could be a policy change, a structural change. So if you could wish for something, probably, what would that be?
To be honest, I don't see it as a need for something to change for people to be able to access capital. Like I said previously, we're in the best capital regime ever, probably in the history of this country. If you have a great business idea, if you can show the investors how they're going to get their money back, if you show grit, like Madame has just demonstrated in her responses, I think you will get the capital, and there's plenty of capital to be unlocked. So I would say don't wait for any structural change, any policy change. Just think very carefully about your market, build a team, have a governance structure that's world-class in place. When we raised $100,000 at VFD 16 years ago, and we weren't sure what to do, whether to return the money because it wasn't enough, we started consulting and we said, what are the things that we need to do to be able to attract capital? And it was transparency, it was governance, it was having a clear strategy and being focused. And then we built a governance structure around a $100,000 business where we had 9 board members, 4 meetings a year, committee meetings. The company was so small, but we were doing all of those things. And fast forward, 2 years ago, we were able to list on the stock exchange because we started with that kind of foundation. So don't wait. The capital is there. Just do your homework and then access the capital. Thank you.
Fantastic. Thank you so much. And I think, a round of applause. I think it shows once again that you're very opportunity and growth focused, and you don't see the need on the structural or policy side. You see actually need to grab the opportunity rather. Absolutely. And I think giving that advice on governance obviously ties also in something we heard from Jude there earlier, in terms of transparency that it could obviously add if you're listed. Jude, for you, what's one hard truth you would tell a Nigerian entrepreneur or founder today who believes their business is ready for institutional financing or public listing, but hasn't yet tested the waters? What would you tell them?
Thank you for that question. I think it's just do it. I mean, that's the only advice. They should just go ahead and do it. As long as they have the right governance structure, the right business model, the right financial advisor assisting them with the process, the pool of capital is enormous, and they can utilize different asset classes. They don't have to be fixated on just equities. But I think the message I really want to pass across is listing on an exchange is not so much only about capital raising. It gives you as a company better sustainability, because now you will have to have the right governance structure to sustain your business going forward. It gives you heightened visibility, because a lot of people will now recognize your brand, and you'll be able to do a lot more as a business. But beyond that, it gives you liquidity and price discovery. So you can now have a better sense of valuation for your company, and your investors who are invested in you will be able to sell or buy because of the added liquidity listing on exchange will impose on your company. So there's no other route for sustainability for any business than to think about listing on an exchange. It's almost like the end game. You must list. So the sooner, the better. We have excellent stories, VFDs here, who have tasted the waters and they have seen the benefit. So there's no downside to it, really, for any business. Thank you.
Thank you so much. Thank you so much. And a round of applause, please, as well, for Mr. Jude. Thank you. Great. Again, back to you, Dr. Nalegu. For FMCG businesses looking ahead, what types of financing do you think businesses in Nigeria in the FMCG sector should be exploring in the future? Green finance, revenue-based financing, or private credit, all in order to stay competitive in a market that probably keeps being transforming.
Okay, thank you once again for that for the opportunity. Financing is like oxygen for the FMCG sector, right? And so you will have to do everything you can to minimize the need to borrow. That's one of the things I would mention. By all the measures that I mentioned earlier, really, really important. I'm sorry, and I would just like to make a bit of a correction to what I said earlier about our savings. The year that we bought sorghum at 282 naira per kg was 2023 February, not 2024. I just needed to put that into perspective so that I don't have a wrong figure out there in the public space. So going back to the question, right? It's important you go for very low interest finance options. We are currently in the process of recapitalizing our business, and what we are currently exploring are options like the green bond, right? We have we want to go massively into renewable energy to fund our operations. To drive our operations, and we are using the instrument of a green bond, raising capital from funds from the capital market. It's an important strategy. Jude has mentioned the need for, having a good governance program and structure in place to give investor confidence to be able to invest in your company. And we have done that. We did a facts behind the figure last year, I think October, and the process is currently on. We're also leveraging on low interest loans like from the BOI, the Bank of Industry, very important opportunity for those of us in the FMCG sector. And also being in a group like the Manufacturers Association of Nigeria, and being able to access crowdfunding is also critical. I mean, we got a 9% interest fund that was given to MAN earlier this year, 70 billion. So being a part of a group like like MAN really makes a whole lot of difference if you want to access low interest loans. Of course, we've talked about equity financing. Jude has mentioned that very strongly, and it's really the way to go. Commercial lending rates are really very high in terms of interest rates. So if you have to go into that space, you really have to be, you have to do your risk management very well. The FMCG is a sector that relies a whole lot on fast, turnover. You want to quickly make your sales, so that you can turn around your capital faster. And so whatever strategy you put in place to ensure that happens really helps you to avoid taking overdrafts, for example, from banks, which further eats into your profitability if you take that route.
Okay.
As a company, we have not taken overdrafts. Since I became the MD CEO, we have not taken overdrafts, at all. So we are only beginning to go into, recapitalizing to access funding through these sources that I mentioned. So that will be my submission for anyone who wants to explore these opportunities. Thank you.
Thank you so much. And a round of applause, please. Thank you. I like that we're having a clear good cop, bad cop situation here. So I obviously can't really get enough of the insights here, but we're moving fast into the last round and then also some questions. Adesuwa, I'd like to ask, I think we've heard a lot now about finance strategies. I think from your point of view, there's another aspect that is quite important in addition to what we already heard, and that is the question of exits and also liquidity. Yeah. So from your point of view, and again, in times that we're in that are challenging, but I think we heard there are growing opportunities, lots of opportunities. What would you say and what advice could you give to Nigerian founders who are very focused on obviously raising capital, but often maybe don't have a clear path to that liquidity and also exit in the end?
Yeah, so it's a very important point, and it's a very important question, especially for fund managers like us that have pools of capital that are finite. We need to return capital. We raise 10-year funds, and we need to make sure that we're returning capital over a period of time. So we always want to align with our founders upfront about what the exit strategy is. So I think it's being very, very intentional and being very clear at the outset of your business of who you're building this business for, and how are you building it to make it attractive for other people to be a part of it. So fundraising is just the start of the journey. You really need to think about building self-sustaining businesses that have attractive margins, that have strong unit economics, where you don't need to continually raise capital to be sustainable. So we always want to align, is this going to be a business for a strategic buyer? Is this going to be a business for the NGX? Is this going to be a business that is going to be attractive for another financial buyer after we've invested? So we always align on the exit method upfront, and we invest and build the business for that buyer through the investment period. So I think it's a very important point, and I think you have to be very intentional about it in our markets, where exit options are not always, they're few and far between.
Fantastic. Thank you so much. And again, I think a big round of applause for, I think, a fantastic panel and great insights. Thank you so much, and thank you for giving us some extra time. I believe we still have some time for questions.
So, so we've eaten a little bit into the Q&A time, but we will get 2 questions in for Q&A. But first, I just want to make a few announcements. I would like to announce the presence of the Acting Consul General for the U.S. Consulate General, Lagos, Mrs. Jo Ellen Gorge. Please, a round of applause. And also, I'm sure some of you here, listen, they've served coffee. If you're not clapping well, it means you're not drinking the coffee. I need some caffeine in your system. Thank you. And so breakfast has been served, and that's been served and sponsored by Mama Dor, so we appreciate the sponsor. Please, a round of applause for them as well. Okay, so we do have time for one, maybe two questions maximum. Good. And but we've heard from you. I would like to also take questions from people we've not heard from yet. Okay, so we have two questions there. Where's my second mic?
My name is Tunde. Okay, we're talking about fundraising for business. Like it's been said, the interest of commercial banks is killing, and you can almost not survive when you have those funding. And yet your business is at a level where you're not able to, you don't need the kind of funding that's $100,000. So how do you survive in this climb as an SME?
Awesome.
And sometimes as some people are just beginning their business journeys.
Yes. All right, thank you.
Thank
That's a great question. Thank you. And we have the second question. I think there was someone on the other table, on table 4.
Thank you very much. Good morning, everyone. My name is Oluwatobi, and I'm the founder of Learn Flourish, one education and workforce development startup. So my question is being directed to Madam Adesuwa. So in assessing finance for business growth, how do you think education innovation, especially workforce development, fits into investors' priority? Because there is no way we talk about growing businesses and we talk about how do we seamlessly move people who have the right sales skills to develop our businesses. So how does that work?
So I think his question was about skill development and workforce development once you've invested, which is a great question. And it's really part of the value creation map that we have at Aruwa, because we're typically building teams, we're typically providing growth capital, so these businesses are kind of 2xing, 3xing, a year after we invest. So there's a lot of human capacity building that needs to happen as part of that. So it's very important to make sure that we equip the team with the right knowledge, the right training, the right resources that they need to be able to utilize the funds that we provide them effectively, right? So putting in not only the right people, but the right processes, the right systems. So it's a very important point. And we work with a lot of companies to help train and coach our founders, but also train and coach management teams, middle management, to make sure they are making informed decisions with the right data and utilizing our capital as efficiently as possible.
Okay, great, thanks.
Okay, let me try and take that second question, because it's something that we do for SMEs and access to finance. So it's not just about bank finance. So we have partnership with Bank of Industry, and they are making loans available to SMEs at a rate that is different from the bank rate, like single digits, and the government is committed to that. They are making funding available, so you can actually reach out and we can set that up. Just to also emphasize, you have Afrexim. They're also doing something similar for SMEs, and also African Development Bank. You heard the MD talking about making $100 million available for youth to be able to do a lot of things. So it's really more about access to information. And by coming for events like this, I'm surprised that we don't have a lot of SMEs. Coming for events like this is really very recommended, because that's where you have access to information that you need to scale your business. And it's not always about money. Corporate governance structure, the right ecosystem, those are the sort of things that you need to be able to scale your business.
If I can maybe just add, I think I would fully agree with that, access to information. And directing the question, I think if anything is to take away from today already, I think we had Fola presenting in his keynote. I think if he can make available the slides, I think there was quite a good step-to-step guide in a way that you can look at and say, do you have your core priorities set in terms of what you're doing if you're an SME? And then I think we heard from the speakers today, laser focus on those priorities, but of course setting up a structure in terms of governance that can even attract finance, right? And I think if you check a lot of those boxes, then you have the best conditions to probably overcome tough situations and access a lot of the opportunities that I think we heard about today.
Yes.
Let me just say
absolutely.
something. Yeah, just 1 minute. The convener, it's really important you use this platform to give information out. The statistics says 36% of adults in Nigeria do not have access to formal finance. And that's really critical. 28 million Nigerians is estimated are unbanked. So access to information is really, really critical. And if you use this platform to help SMEs have these information sources, will really, really be helpful.
Awesome, thank you. And that's a great point. We do have quite a number of SMEs that are here. I believe Flourish, the guy that asked the question earlier, also is an SME in the room. So there are quite a number of them, and we probably should be able to pass some information across. In fact, I had a question really for Mr. Jude, because when you were talking about NGX, I'm not going to ask it, we'll talk offline. But when you were talking about NGX, a lot of it seemed to have been directed towards more corporations being listed. But there are other ways SMEs could also benefit, even as little as just learning how to trade in NGX, in the stock market. The other day I got an alert from a dividend, and I thought, wow, instead of money sitting in the bank, let's do it. UAC. Where are you? So that's also another way. Instead of letting your money just sit, in the bank doing nothing, you can invest some of it in NGX, and especially in dividend-paying companies, and then you can just generate dividends from there. So thank you. Please, a round of applause once again from all of our panelists. We want to thank you so much, Mrs. Catherine Uju Ifejika, Mr. Adeniyi. Keep clapping. No, I'm not hearing your applause. Mr. Adeniyi Adenubi, Mr. Jude Chiemeka, Mrs. Adesuwa Okunbo Rhodes, Dr. Inalegu Adoga, and Mrs. Katrina Link.